All right, ready for this? We're going deep today.
Oh,
Deep into investment strategies.
okay.
Especially for like navigating all this like crazy economic stuff going on.
Right.
So we're going to be breaking down this YouTube video.
Cool.
It's got Charles and Emmanuel Gave in it.
Oh, wow. Yeah.
They're kind of like bigwigs in finance.
Yeah.
And they have this really interesting way of explaining like how to put together a good investment portfolio.
Okay.
They compare it to making like a French stew.
Okay.
It's called pot-au-feu.
Interesting.
Don't worry if you've never heard of it.
Yeah.
The point is,
Yeah.
you don't have to be like a chef or some financial genius to get it,
I like that.
right?
Yeah.
So what's really cool about the Gaves is they're not afraid to like
Yeah.
challenge all that traditional advice out there.
I mean, yeah, so much of it's kind of
Right.
like not really relevant anymore.
Exactly. They're like a lot of the stuff people say could actually be like hurting your investments.
It could be. Yeah.
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 So that definitely got my attention.
Yeah.
So where do we even begin with all this?
Well, they really stress this idea of understanding
Okay.
economic cycles
Okay.
and like tailoring your strategy
Okay.
to like match those cycles.
All right.
And they actually have this really helpful tool for visualizing this.
Oh, cool. What is it?
It's called the Four Quadrants model.
The Four Quadrants model.
Yeah.
That sounds maybe kind of complicated.
It's actually not.
Oh, okay.
It's really simple.
All right.
Imagine a graph,
Okay.
and it's just split into 4 sections.
Got it.
Each of those sections represents like a different combo
Okay.
of inflation. That's like how much prices are going up
Right.
and economic growth,
Yeah.
like how well the overall economy is doing.
I'm picturing it.
Yeah.
Okay, so how does this model tell us where to like put our money?
So the Gays argue that like
Okay.
certain types of investments do better in some quadrants
Okay.
than others.
Makes sense.
So for example,
Yeah.
when you've got high inflation
Okay.
but low growth,
Yeah.
they say focus on what they call scarcity assets.
Scarcity assets.
Yeah, like gold.
Oh, okay, so gold.
Yeah,
The classic safe haven. Right.
right.
That makes sense.
Exactly.
But what makes gold a scarcity asset?
Well, gold is like a finite resource.
Okay.
There's only so much of it.
Right.
So when currencies start to lose value
Yeah.
because of inflation,
Mm-hmm.
people tend to flock to things like gold,
Makes sense.
tangible assets.
Mhm.
It drives the price up.
Yeah.
It's considered a really reliable store of value.
It's like that saying safe as gold.
Exactly.
The video mentioned the Swiss franc as a scarcity asset, too.
Yeah.
I never really thought of it that way.
They make a good case for it, though.
Yeah.
The Swiss franc is known for being stable.
Right.
And the Swiss National Bank,
Yeah.
they like really carefully manage the supply.
Mhm.
So that makes it popular for
Yeah.
investors who want like a safe haven,
Makes sense.
especially when things are kind of shaky globally.
Yeah. That's something I'll definitely have to look into more.
Yeah.
So we've got our four quadrants model,
Mm-hmm.
and we know that like gold
Yeah.
can be a good bet in certain situations.
Yeah.
But what other kinds of investments should we be thinking about?
So the Gaves break it down into 4 main categories:
Okay.
cash,
Okay.
bonds,
Okay.
gold, which we've already touched on,
Yeah.
and stocks.
Those seem pretty straightforward.
Yeah.
But what's like important to really get about them?
Well, I think it's crucial to understand like
Yeah.
the fundamental nature
Okay.
of each of them.
Okay.
So like cash and gold,
Okay.
they represent direct ownership.
Okay.
You hold the actual thing,
Right.
whether it's dollars in your wallet
Right.
or
Right.
gold bars.
Okay.
But bonds are different.
Okay.
Bonds are contracts.
So you're basically lending money to like a government or a company.
Exactly.
And that comes with its own risks, right? Like
Right.
interest rates changing
Mm.
or the borrower just not paying you back.
Exactly.
Yeah.
So bonds are way more vulnerable
Okay.
to like government actions and the economy in general.
Okay.
And this actually brings us to a point that the Gaves make
Oh.
about France specifically.
Okay.
They're kind of worried
Oh.
about some potential government policies in France
Okay.
and how those policies might impact the safety
Yeah.
of assets held within France.
So really?
Yeah.
They're worried about the French government.
Yeah, they seem to be. I don't think it's like panic or anything,
Mhm.
but they're definitely like
Yeah.
advocating for being really aware
Okay.
of the political risks,
Mm-hmm.
and where you're putting your money.
Yeah.
They seem especially worried about governments
Yeah.
potentially like
Yeah.
taking people's assets,
Oh, wow.
maybe just solve their own
Yeah.
financial problem.
That's intense.
Yeah.
That definitely makes things more complicated.
Yeah, it's not just
Yeah.
picking stocks and bonds.
Right.
You got to think about where they are,
Yeah.
what the government's like
Exactly.
in that
It's
place.
like a whole other level of
Yeah.
risk assessment.
The Gaves actually recommend diversifying,
Okay.
not just with
Yeah.
the different types of
Well.
investments, but in different countries too.
Oh, interesting.
Yeah, they really like
Uh-huh.
foreign-based investment platforms
Okay.
to like get away from
Yeah.
the risks in France.
So it's like spreading your eggs across
Exactly.
multiple baskets
Yeah.
in terms of like,
Asset types.
yeah, asset types and also,
And locations?
yeah, where your money is.
Yep.
That makes a lot of sense.
Yeah.
Okay, so let's switch gears for a sec
Okay.
and talk about their actual investment strategy,
Okay.
the pot-au-feu portfolio.
Right. Their recipe
Yeah.
for like a solid
Yeah.
investment plan.
It's based on what they call the permanent portfolio,
Okay.
which basically means
Yeah.
you put 25% of your money
Okay.
into each of the 4 asset classes.
So cash, bonds, gold,
Yeah.
and stocks.
Exactly.
So just an equal split
Mm-hmm.
across the board.
Yeah, what's the thinking there?
Yeah. Why do they like that?
Well, the idea is
Yeah.
to make a portfolio
Okay.
that can handle like
Yeah.
any kind of economic weather.
Okay.
So when one thing is down,
Yeah.
another thing is probably up.
Right.
It like smooths out the bumps.
Good.
And you aim for like
Yeah.
consistent growth over time.
I like that.
They think the permanent portfolio can get you
Okay.
like 4% per year on average.
That sounds pretty good.
Yeah, especially when
yeah.
the markets are so crazy these days.
It does seem like a roller coaster out there.
It is.
Yeah.
They actually have the data to back it up.
Oh, really?
They show charts
Okay.
of how the permanent portfolio
Yeah.
beat individual assets.
Okay. Over like 30 years.
Oh,
Even during those big market crashes.
that's impressive.
Yeah.
It seems like this approach could really give you some peace of mind.
It definitely could.
So if I'm getting this right,
Yeah.
they're saying, look beyond the traditional advice.
Mm-hmm.
Think about those economic cycles,
Yeah.
geopolitical risks,
Uh-huh.
diversify.
Across the board.
Yeah, and build that balanced pot-au-feu portfolio.
For the long haul.
Exactly.
You're right.
It.
For the long haul.
It's not set it and forget it, though.
Oh, okay.
You got to manage it.
Oh, okay. So how do you do that?
You have to rebalance it
Rebalance.
every 3 months.
What does that even mean?
It means like adjusting your holdings
Mm-hmm.
to get back to your original asset allocation.
Okay.
So let's say stocks did amazing.
Yeah.
Now they're 30% of your portfolio.
Okay.
You'd sell some stocks.
Right.
Buy more of the other stuff
Got it.
to get back to that 25% for each.
So you're like taking some profits exactly when things are doing well
Mm.
and then putting it back into other areas
Right.
that are maybe not doing as well.
Exactly. It's about staying disciplined
Yeah.
and not getting like caught up
Yeah.
in the hype.
Right.
You stick to your plan.
Yeah.
Don't let your emotions mess things up.
I like that.
Yeah.
Before we move on,
Yeah.
I'm curious about something.
Okay.
The Gaves seem kind of skeptical
Yeah.
about holding a lot of cash or bonds,
Right.
especially now.
Yeah. Why is that?
Yeah, what's the deal with that?
Well, they point out
Yeah.
that cash and bonds
Yeah.
are really vulnerable to inflation.
Okay.
And like government meddling,
Yep.
they say if you have too much cash,
Yeah.
when there's inflation,
Yeah.
you lose buying power
Okay.
over time.
Right.
And with bonds,
Yeah.
they're worried about governments
Okay.
like inflating their way out of debt,
Oh,
which would like devalue
right.
your bonds.
That's scary. It makes you think.
Yeah.
Even the safe stuff
Yeah.
can be risky.
It really shows you how important it is
Yeah.
to understand each type of investment. Like,
Yeah.
what are the risks?
Yeah.
What are the potential rewards? How are they going to do
Right.
in different situations?
Yeah.
Now, before we wrap things up,
Yeah.
we got to go back to Bitcoin.
Oh, yeah.
That really got me thinking.
Mm-hmm.
Charles Gave's take on it. It's
Yeah.
like he sees it
Yeah.
as more than just
Uh-huh.
another speculative asset.
He sees it as this like fascinating
Yeah.
monetary innovation,
Okay.
maybe even revolutionary.
Wow.
He says it's the first time we've tried to create
Okay.
a reserve asset
Okay.
that's totally outside government control.
A reserve asset outside of government control.
Yeah.
That's a big claim.
It is.
What does he even mean by that?
Well, think about like
No.
traditional reserve assets like
I see.
gold
Okay.
or the US dollar.
Okay.
Their value comes from governments.
Okay.
But Bitcoin, it's
Yeah.
on a decentralized network.
Okay.
There's no one in charge.
So no one controls
Oh.
how much there is or
Yeah.
how it's made or...
Exactly.
Yeah.
And Gavin thinks
Yeah.
that makes it really powerful
Okay.
for protecting your wealth,
Okay.
especially when governments are like
Yeah.
getting more involved in the
Yeah.
markets.
So it's like digital gold,
Kind of.
but with like extra protection
Yeah.
from governments.
Exactly.
It's definitely a different way of thinking about money.
It is.
All right, so we've covered a lot.
Yeah.
We talked about the four quadrants model,
Mm.
different asset classes,
Yep.
diversifying, rebalancing,
Uh-huh.
even Bitcoin.
What a journey.
It has been.
Yeah.
And their whole approach,
Yeah.
like understanding economic cycles,
Yeah.
managing risk,
Yeah.
thinking long term,
Ex-
that's really valuable.
It is for anyone
Yeah.
trying to figure this stuff out.
Before we get to the final takeaways,
Yeah.
I want to ask you something.
Okay.
The Gaves are clearly passionate about
They are.
financial education
Right.
and helping people
Mm.
take control of their money.
Yeah.
What do you think their main message is?
I think they really want us to be active
Okay.
in our financial lives.
Yeah.
Not just like
Right.
passively accepting
Yeah.
whatever the banks tell us
Right.
to do. It's like you're saying,
Yeah.
don't be scared of finance.
Right.
You know,
Yeah.
learn about it.
Okay.
Ask questions
Hmm.
and make your own decisions
Right. Make decisions that
Yeah.
like work for you.
that align with your values,
Exactly.
your goals.
I love that.
Yeah. And they give you the tools to do that.
Yeah, they do.
They want us to really think about those economic cycles
Yeah.
to get those asset classes
Mhm.
and the impact of like
Yeah.
political stuff
Politics, yeah.
on our investments
Mhm.
and to build portfolios that are like
Yeah.
flexible,
Okay.
adaptable.
I like that.
Yeah,
It's powerful stuff.
it is.
It makes you realize you don't have to be like a Wall Street genius
You don't.
to manage your money.
It's about the basics
Yeah,
and having a plan.
exactly.
at
And if
all.
you want to learn more,
Yeah,
the Gaves YouTube video is amazing.
it is. It's on the,
Yeah, it's on the Institut de Liberté Charles Gave channel.
that's the one.
So check it out.
Definitely.
All right, as we wrap up this deep dive,
Okay.
I want to leave you with something to think about.
I like it.
If you were to use their principles,
Yeah.
understanding those cycles,
Mm-hmm.
diversifying strategically,
Yeah.
taking that long-term view,
Yeah.
being careful about where your assets are,
It's important.
how would that change
Yeah.
your financial decisions?
Good question.
Yeah.
Are you like too reactive
Right.
to the market going up and down?
Right.
Are
Yeah.
you missing risks
Yeah.
in your portfolio?
Are there things you could be doing better?
Could you be doing more?
Yeah. To build that
Yeah.
long-term wealth and security.
It's tough,
It is.
but it's worth it
It is.
for that peace of mind,
Yeah, for sure.
that confidence,
And for a better future.
a stronger financial future.
Couldn't agree more.
Remember,
Yeah.
knowledge is power.
Especially with money.
Yeah.
Thanks for joining us.
Thanks for having me.
We hope this was helpful,
Yeah.
maybe even a little inspiring.
Definitely.
Until next time,
Yeah.
happy investing.